meeting. And if that's too loud, well, it doesn't matter. Because we're not,
Yeah.
Nobody's on. Okay. Chief?
Yes, this is a meeting to go over the 2023 first cut on the budget with some higher level numbers. It's not line item, it's at program level. Answer any questions, and then we will adjourn into a executive session to talk about labor related issues and their impact on the budget. And since we're still in the middle of collective bargaining agreement negotiations, and we are allowed to do that.
The thinking is that that discussion is going to potentially get into negotiating strategy issues.
Yes.
In
It
fact,
will
it will
have,
by definition.
it will have an impact on it, yes. So that's kind of the agenda today. So I don't know that it'll take very long. Depends on how many questions you all have and how quickly you want to get back into the autumn Indian summer. That's where I'll stop. So the first sheet that I handed you was a spreadsheet or formula sheet that shows calculation for the property tax next year. So this is the step-by-step process that we do that. I thought I'd walk through it very quickly and give you an idea of what our property tax revenues will be. And then bearing in mind that our total income, about 95 to 96% of that comes from property taxes. I mean, we don't have much else that we use regularly for property taxes. So anyway, the formula generally is that you take the last year's total revenues that we received from property tax. You basically cap it at 1%, or in our case, 6%, because we have increased the levy increase amount. Last year, we'll be able to do that until or unless we ask the voters for approval of a levy lift again next year. We'll talk a little bit more about that. And then you add in new construction, and that's booked in at the same levy rate that was used last year. And then you get a total levy amount, and you can see that there are two limit amounts. One is based on the cap that we have, which is 106%. The second cap is that it cannot exceed the $1.50 levy rate. So we have to adjust, look at both levy limits in that. The bottom line for all of this is the fact that because the total assessed valuations increased much more than 6%, we lose capacity, if you will. So if you look at the green box about 2/3 of the way down, it shows bank capacity, and that essentially next year in 23, we will have about $1 million of bank capacity that we can't levy on because of the limits that we have.
So in other words, if we could get $1.50, we could add another $1 million.
Correct.
Well, if the voters approve this.
So we're estimating that our levy rate will actually be at about $1.20 next year, which is down from $1.33 from last year. So we had a better than 20% increase in our total assessed valuations last year. As you can see there, we also had $28 million new construction last year, which is pretty surprising to me. So anyway, what we have to work with is an estimated $3.9 million property tax levy for next year. So that's where we start off.
Right. And can you mention the item 8 refund levy amount?
That's the amount of money that, and I'm not quite sure it's provided for in law, but it's money of defaulted taxes that we get back essentially. So it's an add, not a detract.
Okay.
And we get that statement from the assessor every year as well. It's not a lot, $6,300.
Okay,
But in the past, it's been a couple $100s, so.
Yeah, it's not a lot.
oh,
Yeah.
So again, our total levy for, we expect will be $3.9 million next year. So this shows all the revenue side. Is there
mhm.
any questions on that at all? Okay. The next sheet, the colorful one shows by fund. We have, if you remember, we have 4 different funds that we deal with. The yellow one is our checkbook, I like to call it. It's our annual, expenditures, operating budget, or expenditure budget, or whatever you want to call it. But that's the main one that we receive tax money into, and we pay our bills from. So the orange one next down is our capital repairs and replacements budget. Again, that's the one that we make an annual allocation into, and it's a savings account for our future capital expenditures that we have. Red one is our revenue budget, and
Reserve.
I'm sorry, reserve budget. And that's our rainy day fund. We have set that money aside to pay or help contribute and fund any unforeseen expenses that we might have, or interruptions in revenue and so forth. We do have a policy that governs that. Our policy has been that the combination between the reserve budget and working cash balance be it equal to 1/3 of our annual expenditure or operating budget.
I disagree with that.
That in the past. that's
Oh,
been what it
not
is.
now.
Our proposal has been that we fully fund it, and that we'll talk about that here.
Well, no, I think our written policy is that reserve needs to be 3 months.
Correct. And it's been interpreted in the past that,
And that the operating budget needs to have sufficient capital to cover until April.
so what we're looking to do, and what this budget we're talking about will fund full 33% of our operating budget in the reserve account. Then the last one, the purple one, is the capital reserves, and originally that was a depository for savings for building a new fire station. And there was some money that was on the merger, there was some money from District 7 that was deposited into that as well. So the plan is to continue to take transfers out of that 6685 fund and supplement our revenues for our operating budget. So when you look at the chart there, you've got the 4 budgets, and you've got 3 columns on the right-hand side. The first one is the 2022 budget that we have. The second column is our current accounts as through September for this year. And then the third is our 2023 proposed budget. So starting at the top for the 2023 proposed, we're looking at we expect to have about $995,000 left as cash carryover, unspent money. Unlike the state, we get to keep our cash carryover. At the state, we don't do that, but we do. Then adding in that $3.9 million that we had just looked at on this chart of expected property tax revenue. And then the third is a $750,000 transfer from the purple fund into the yellow fund, which is what we did also this year. We agreed that we would take money out of that capital account and supplement our operating fund. And then other revenues like interest on cash, some contract payments and grants and so forth, total about $31,000. So our total revenue we expect to be about about 5.7 million next year total, including the cash carryover. So going down the list, these are at program level totals, and generally I've gotten the information back from all the program managers about the amounts that they want to have, and these would include increases. So for example, administrative includes the higher amount of insurance that we're expecting, and we'll be talking about that at our next regular board meeting, which is probably the single greatest impact on the change for that budget. Executive personnel include basically the three of us, and it shows that there's a COLA as programmed by our policy and our CPI account. And that's about the only change to that. The third one is the incident readiness and response personnel, which is our career bargaining unit staff. And the number that's shown here is using the same expected numbers of FTEs, which is 17.5 for the entire collective bargaining unit. But I estimated the cost based on our current salaries and benefits,
Right.
which
is the only hard values that we have to use for that estimate at this
today.
time.
That's correct. Plus I had a 5% increase to their salary range, which would have been a natural part of the current agreement.
Right.
So that's what that total is. That number will most likely go up as we complete our and agree, adopt a new agreement. The board personnel is pretty much the same because your wages and compensations based on statute. Volunteer personnel is showing a staffing level of about 45 total volunteers in our incident readiness response program and reception staff program. The high, that might be a bit high. Currently, I think we have like 28 or 9 volunteers.
Yeah.
So that, although the total numbers, not a lot of money. I mean, and we can talk about that a little bit. But, so anyway, we programmed that in for 23. Heidi provided a budget for me for public relations at 12.2. And that includes and has included the quarterly newsletter that we put out and the efforts that her COTS team is doing in outreach and so forth. Training and education, Brandon and Daryl got together and gave me this number. The increase, a lot of that increase is based on, we're on a cycle now for live fire training, which is kind of expensive. It involves some overtime, it involves renting the facility over at Olympia's training pad over by Home Depot and so forth. So that's the primary increase on that.
How often do they do this cycle? Do they do like our
Once every other year.
every
The
other year?
requirement is every 3 years, but we do every 2 years.
Okay. Thanks.
Health and safety shows an increased cost, continuing the pilot for the expanded physical exams for staff. We still not have adopted a new standard policy yet because we've we took that out of the negotiating process for the new agreement, which it would need to be included in. And we delayed it until next year, and we'll let the labor management committee and negotiate what we have. And there's still a lot of questions that we have about that process and everything, but we're continuing the pilot, and the physical exams under the pilot are more expensive than the current ones that we do through WestCare. I don't know what the costs were, but facilities, operations and maintenance, both are no significant changes either to those other than inflation and increased cost of everything, including diesel and propane gas, which is probably the most significant increases that we have. Then the transfers to CR&R, and this amount, as you can see, jumped, but so did the cost of all the capital items. So in our review of the CR&R that we did this year, we adjusted the numbers and everything. Consequently, we need to increase the annual contribution we make. So that's what the 350,000. So the plan is shows, at least under the current schedule and budget, solvent through 2033. So we've gone on about 10 years or so to look at the bow wave of any large purchase, including the purchase this year of the new pumper. So it covers that. The last one there is new. That is a proposed annual payment to the reserve account to maintain a 33% total of the operating budget amount. So we'll have a running account that equals about a third of an operating year. Should a spigot of money shut off for some reason, or could be used in an unforeseen circumstance where we need large sums of money and aren't covered by insurance, that sort of thing. So we've talked about that. We thought about doing it in 22 and we didn't have sufficient funding and just didn't do it. So we're proposing that we do it in 23. And that would be an annual expenditure every year. Yeah. So that's operating budget. Are there any questions on this?
Yeah, just briefly, slightly off topic, but since you brought up and mentioned the new pumper at the last meeting, there was a question about the risk associated with changes in costs to the manufacturer and whether or not we paid 100% upfront. If I was wondering was there any follow-up on that?
Yes, there was. The feedback I got from Brent was that the salesperson suggested we strike that contract before we sign it, which is what we plan to do. So, which means they get our money. That's all they're getting.
Okay. Thank you.
That's the right answer.
Well, of course it was the right answer. And I'm going to assume the salesperson had the authority to make that statement. So, because that's what we're going to do.
Okay.
If the manufacturer wants to.
That's going to happen in the next 3 days or
drop
2 days?
Yeah, I haven't got the paperwork yet from Brent. So,
Because 21st was their magic date, right?
exactly.
Okay.
You know, told me screws this one up, it's coming out of his salary. So, next 4 years. Any other questions on the operating budget? The CNR&R budget, pretty simple, money in and money
I'm
out.
sorry, I
but-
did have one question.
Yeah.
Election costs are usually in the administrative
Yeah.
budget. Do they, it seems to me, I recall the timing of those is sometimes when you have an election one year, sometimes the cost shows up in the following year. Is that?
It depends. I mean, we've had the general election, the invoices come in after January and we end up paying it
Right.
then. Generally, with the election that's in the cycle of 22, there's a lot of agencies. So the average cost per user goes down. So I don't see it significant for 22.
I'm thinking
So it's off year ones that are.
23 though, for next year. Is that in here or are you expecting that they'll show up in the following? year?
Well, I'm expecting that the 22, part of the 22 will show up. I don't know about 23. I don't, if we run our own issue. I haven't sat down with the total amount of that cost yet, so I'm not sure what the
What
impact
time
would
of
be
year?
Well,
is it running?
in the fall.
In the
November?
fall.
Yeah.
Well,
If we
and
won't be billed to the following year then.
but if it's in your 23 budget and then you don't get the bill in 23, that would become part of your carry forward, right?
Right.
And so you'd have it
I
available.
mean, yeah, you don't lose it.
Right.
Yeah, I'm just trying to clarify the timing on it.
Yeah.
So when are we planning on doing that levy?
Well, we're going to
We're
talk
not.
about that.
Okay.
It
I haven't
depends.
decided yet.
Yeah.
It depends.
Okay.
So, like, to answer your question,
But you don't have extra money.
I didn't put in a whole lot extra.
Not that it's a huge amount. but it is
Yeah.
something.
Yeah.
Sorry.
No, that's fine. Yeah, capital repairs and replacements. It's money in and money out. And you can see that we're not planning to do, we're not planning for a lot of expenditures in that, in 23. Reserve budget, you can see that currently we have about 1.3 million in it. And then based on the formula that would estimate 33% of the operating budget for the year, we determined that we need about 292,000 more to keep it at that level. So that expenditure from the operating budget into this budget would be included. And then other revenues are primarily interest on cash in the bank, which the interest rates are awful right now. So that's what that is. And we don't expect to have any expenditures out of that fund next year. And then the last one is the capital reserve budget. There would not be any new transfers in for revenue other than cash carryover and some interest. So as we continue to withdraw out of that, the intent would be to eventually close that account out till such time that we have another major capital project that probably would require voted general obligation bonds. So really that's it.
It makes sense to me now. If I would have just read this and no explanation, I would have been, well,
Yeah, there's a P and shell game a bit between the funds. But basically that's how it works. Nope, do you have anything to add?
Nope.
So at our regular meeting in November, I was gonna have our official budget hearing and bring forth documents that I'll send you prior to the meeting, but they're basically just the documents that we have to submit to the county to get the revenue.
oh, yeah.
So this is just this has nothing to do with the county at all.
Yeah, really the only thing that we work and are required by law to do is on the revenue side. We do file an expense budget with them, but they have no authority over it, or there's no time frame required for that, but we do file one with them. The important thing is making sure that we adopt and certify our levy so we get our money, and we have to do that in November. So that requires a special public hearing,
Okay, cool.
and we want to make sure we do that.
Yeah, oh, yeah,
Yeah.
yeah,
Oh, yeah.
oh, we live in Perksville.
Yeah. So really, that's for the 23 budget is we're proposing.
Okay.
Do we need to vote on this? No, this will be voted on next month.
The important thing is certifying our revenue, our tax levy. And then generally we've, depending on settlement of our contract, which will affect a significant portion of our operating budget, is kind of the timing on that. And that's why we've worked very hard to try to complete that as we can, hopefully in November. That will settle the amounts that we need to pay for labor. Then we have the final numbers essentially by then. We've adopted the expense budget in December, just long enough to give Heidi a chance to set it up in our accounting software and that, so that we can spend money after January 1st. So
But we have also done it as late as January.
We have.
CBA wasn't.
we have done that, yes. But hopefully, I think that we'll have CBA done, and I think that this level at least we'll have pretty well set up certainly by the end of December. So.
Anybody have any questions?
No, ma'am.
So do we have more business on this, or do we need to adjourn?
That's my pitch for today in the open public meeting.
Then we'll adjourn this meeting and go into our executive session.
Well, I don't think we're adjourning. We're not ending the meeting.
We're not